Oil prices are volatile on news that General Gaddafi's forces are fighting rebels in Tripoli, and there are worries now that oil production won't jumpstart in Libya as soon as everybody expected. Jeff, I turn to you. How are you trading all this uncertainty in WTI right now?
Very carefully. It's been, when you have a news-driven market, you're always suspect to a news item breaking and making the best plans go down the toilet. It's a tough game.
So are you staying on the sidelines right now to see how it pans out in Libya, or are you taking opportunities to intraday trade?
Stepping very lightly. Again, you take a little shot here and there, but really to make a long-term commitment, you're really looking for trouble if you do.
Now, here's my longer-term question. Does the result in Libya actually wind up meaning anything for Brent and WTI? Considering that, I don't really feel like those prices are reflecting true supply and demand in the market, and I think a lot of traders would agree.
I do agree with you, as a matter of fact. The truth is, remember the Libya situation is not going to resolve that quickly, first off. They're not coming online that quickly. But keep in mind, it's all a matter of perception. If suddenly now things calm down and they begin to go online, that will affect the market right off the bat, and it'll soften the Brent numbers. So probably that spread will continue to come in a little bit.
And then as that does, do you think WTI will head higher as traders sort of reverse their bets?
Well, again, that'll be the case. You'll have strong WTI, weaker Brent, and it'll narrow. We came in as much in over this last time to about $12. And about as far as about 27. So there's plenty of room for this to gyrate in between.
Where do you think the spread's going to wind up landing?
I would think somewhere in the teens. I would say about 16 to 18. That would be about where it would go. That would cover most of the transportation that would be between the two and make sense.
And then for oil prices, looking at WTI, what should the price be at if you take out all the investment demand? What are you betting on for the long term?
Well, I'll tell you the truth. Wherever we're trading is where we belong, okay? Let's leave it at that. But the truth is, we're right where we were before the Libya crisis even started. And now the market is really behaving, believe it or not, in a supply and demand kind of situation here where the market, you can actually, get a handle on it right now.
Do you think that WTI is reflecting supply and demand?
I would think right now it's about right. I think it's probably going to ease back a little and probably test the $80 level in the not too distant future. But right now I think we're fairly priced for the circumstances.
Even though we're seeing a lot of global slowing from China and Germany and the U.S.?
Yes, and that's why we're slowly going to be drifting lower. I think probably we'll test that $80 level. And again, if there's nothing positive coming out, we will be in the mid-70s.
All right, so then when you say that you're being very cautious intraday, what does that mean? Are you taking opportunities to go long, or are you shorting? How does that pan out?
Well, if you're a trader, you have to be willing to play both sides of the market. It's really, unless you really want to draw a line in the sand and really take a stand. I'm not that kind of, I'm pretty much a scalper by nature. So I'm in and out, and I really don't want to get crazy. So I have to play both sides of the market.
All right, thanks so much, Jeff. I really appreciate it. Play both the long, the short side. You got to be nimble in this oil market.